2024 is now underway. We're 1 month in. What's happening in the markets? What's happening with interest rates? And will we have a recession in 2024? Hello, everybody. I'm Dean Barber, Managing Director of Modern Wealth Management. Welcome to the monthly economic update. It is the end of January, and it's been a fairly good month for stocks. We can see here the NASDAQ 100 up 5.64% for the month. It was the clear winner last year, and it started out 2024 as the winner as well. The S&P 100 up by 4.87%, while the S&P 500 gained 3.86%. The Russell 1000, a close fourth place here, 3.66%. The Dow Jones Industrial Average up 1.96%, and the S&P 500 Equal Weight, RSP, is up by 0.41%. The only loser of the major indices for the month of January was the Russell 2000, down by 0.91%. Let's take a quick look at the yield curve here for the month of January. So you can see here that the 10-year Treasury is still well below the short-term Treasuries at 4.06%, while the 1-month Treasury over here at 5.53% and the 3-month Treasury at 5.42%. So remember, this inverted yield curve has predicted recessions almost 100% on a historical basis, and it's been inverted now for almost 2 years. And so everybody's saying, where is the recession? Where is the recession? Well, it's interesting that our GDP number for the fourth quarter came in much stronger than expected at about 3.3%, while inflation continued to cool. So the markets are continuing to believe that the Fed is going to be done raising rates, and that the Fed has also done a good job of engineering a potential soft landing, meaning that the economy can cool and that interest rates can begin to come down without us going into a recession. If we take a really quick look here at a year-to-date basis, what's happened is the yield on the 10-year Treasury has come up slightly. So the purple line down here is the TLT, and that is the 20-year Treasury. And so with that yield coming up slightly in the month of January, that has taken the 20-year Treasury down by about 4.07%. The bond aggregate down by 0.8%. And then here we have the RSP, the equal weight S&P 500, and then the S&P 500. But I want to take you back here and go to the date where everything really started to change. And that was back to October 18th of 2023. That was when the Fed said that they thought that they were done raising rates. And since that point in time, you see here that all of these indices here, the TLT, the S&P 500, the S&P 500 equal weight, and even the bond ag have all gained nicely since mid-October of 2023. As we head into the rest of 2024, like I said earlier, I think there is a good possibility that the Fed has engineered a soft landing here. That remains to be seen. Most experts are anticipating that we will see an interest rate drop from the Fed during the second half of the year. Maybe 1, maybe 2, maybe 3. That's what the markets are counting on right now. We're in the middle of earnings season, and so we'll continue to keep a close eye on everything. At this point in time, though, unless something really comes out of the blue that we're not anticipating, it looks like the markets have room to run higher, and it looks like bonds should fare pretty good this year as well, especially if we start to see those interest rate cuts come in the second half of the year. Hope everybody's enjoying their 2024. I'm Dean Barber, Managing Director of Modern Wealth Management. Thanks a lot for joining me for the monthly economic update.